What are we going to give a quick breakdown on today?
So today we're going to be talking about offers and what makes a good offer. We have a lot of buyers that we've been working with, and some of them have definitely missed out on homes. It's a very competitive market right now, with the interest rates being a lot higher than what we've seen in the last few years. So it's difficult to get an offer accepted right now. And we wanted to give you some pointers on how to put in a strong offer on a home.
All right, so the first thing obviously is going to be price, so you have to have a competitive price. One of the things I've noticed is if a house is listed and it's in the first 5 to 7 days we're putting that offer in, you kind of have to expect that you're probably going to have to be at asking or over asking. Once we get
usually over asking
still in the market we're in. Once you hit that day 14, day 21, I mean, sure, you can start negotiating price, but that first 7 days, 10 days, you're probably still going to be over asking price.
And over asking doesn't necessarily mean over market value. You want to make sure you're not too much over market value, because if you are, you're going to be upside down on your mortgage the second you move into your house if prices drop. So you want to be competitive, but you don't want to go crazy.
Yeah, stay within your comfort zone.
And that's something we can help you with too. We can determine the market value and see what actually makes sense for that home and the location.
What's another thing they can do?
So another thing that you can do is limit home inspection. If you, let's say, are putting an offer on an older home and you don't want to give up home inspection completely, what you can do is limit it to a certain amount. We just had a buyer get into a home and he was in a very competitive situation. He didn't want to give up home inspection. So what they ended up doing was limit the home inspection to items up to $7,500. So that meant that if the home inspector found anything over that amount, they could start negotiating with the seller. Anything under that, they were responsible for.
And one of the other things they did was they knew the heating system was older, and they knew that the seller had just recently updated it, serviced it, and put a good chunk of money into it. So the home inspection completely excluded the furnace. We just wanted to make sure furnace was operational because they said it was. So other than confirming it was operational, they were not going to be having that as an inspection issue.
Yeah, and another thing is the appraisal gap, and this is something we talked about in our last video.
Yeah.
Basically what this means is that you as the buyer are willing to cover a gap if the appraisal doesn't come in at market price. So it would look something like this in an offer. I, as the buyer, am willing to cover an appraisal gap of up to $10,000. So if the appraisal misses by $10,000, you're going to be covering that amount.
And that's kind of a key thing to do right now, because most offers are pretty close to market value or a hair over market value, and the appraisers are typically anywhere from 3 to 6 months behind on market value. So if the property is selling for $500,000 and I ran the comps and they're going to be anywhere from $495 to $505, it's quite possible that appraisal could come in at $490. So by having that appraisal gap in there, protects you and makes the offer a little bit stronger. And obviously, the bigger the appraisal gap you can put in, the stronger the offer is going to be. Another thing you might want to consider doing is limiting any contingencies you might have. So if you're home sale contingent, you're selling your house, make sure your house is under agreement. They've gone to purchase and sale. They probably won't have their mortgage contingency on their end, but at least you know the risk of them not closing is very, very low. That way you can remove a home sale contingency on that initial offer.
Yeah, sellers don't like to see a home sale contingency, especially not in today's environment when they're getting 10, 20 offers over asking price. Very few of those offers have a home sale contingency.
Yeah.
So like Sean said, you'd be comfortable waiving that. Make sure that you're pretty far along in that process, the process of selling your home, so that you're confident that you can waive that and not run into any issues.
And even if you don't want to waive it initially, so long as you can let the listing agent know, look, we're putting in a home sale contingency, but we've gone to appraisal, we've had home inspection, the sellers have gone to underwriting, we're just waiting for their final approval. If we want to do a kick-out clause, we're happy with that. Just we want to get that extra 3 days, 5 days, 6 days before we are able to finalize everything.
Explain kick-out clause.
All right, so kick-out clause. When you look online and you see a property for sale, it'll say active. When I look online on the MLS, I'll see active and there'll be a little clock next to it. So I know there's something called a kick-out clause. What this is they have accepted an offer, they've signed an offer, it's gone to purchase and sale, everything's all set, but the other offer is contingent on home sale or home inspection or appraisal. There might be something they have in there, and the seller wants them to remove it, but they're willing to go forward with them so long as a better offer doesn't come in. So that kick-out clause is they can kick out the current offer if a better offer comes in. Now, the current offer...
Is there a time limit on that?
Yeah, so you'll see anywhere from 24 hours to 48 hours that you're going to get to decide if you want to remove your contingency. So you have a home sale contingency, and you've got a buyer on your property, they've gone to purchase and sale, and you're not going to voluntarily remove your home sale contingency if you don't have to. But then the seller comes back to you and says, I've got another offer, it's as strong as yours, the price is as good or better than yours, I'd like to accept that offer, can you remove your home sale contingency? And if you're in a position where you can, you'll remove it. If you're not, you'll say, I can't remove it. And then the deal falls apart, you go back and start looking for another house, and then they go on and sell it to the next person.
Okay.
But you get your deposit back, everything, comes back your way.
But if you, let's say, do remove the home sale contingency, then they remove the kick-out clause.
Yep, and then the other offer gets tossed to the curb, and you move forward and you close on the house and you get a new home.
Okay, that's good to know.
All right, so those are a few things you can do to strengthen your offer. Also, your deposit, how much money you put down, what's your mortgage size.
How much you're mortgaging. So obviously the more you put down, the better. I know that a lot of lenders are saying, oh, you can put down as little as 3%. Yes, that's true, but if you want to be really competitive in this environment, you really want to put down more than 3% if you can. 20, I think, is ideal because you don't have to pay mortgage insurance, and that's just another cost added on top of your monthly payment. And then you're also in a very strong position because the seller will look at that, compare your down payment with, somebody else's that's 3 or 5%, and they look at that as, okay, this person has a much better chance of closing on their loan and moving ahead with the purchase, and they're going to favor your offer if your down payment is a lot higher.
And if you can't get to 20%, but you can get to 15 or you can get to 10% is better than 3%, 15% is better than 10.
Obviously, whatever you can get to.
Yeah.
If you have the 10%, but you're thinking, maybe I'll just put down 3, it's pretty unlikely that you're going to win out in a competitive situation.
Yeah. If you're the only offer out there, great. Put down as little as you want to put.
But that's just not the reality right now. Yeah. We haven't seen situations where it's just the one offer. It's still been pretty high multi-offer situations.
Yeah. And if you happen to be doing a VA loan, make sure the agent you're working with understands VA loans because they are fantastic loan packages. They're stronger, in my opinion, loan than anything else. Typically, they will close. They're a little harder on the upfront because there's a little bit of inspection issues that have to happen. But if your agent understands it and they can explain that to the listing agent, in my opinion, a VA loan is better than just about any loan out there. And some agents look at a VA loan as a weaker loan, so make sure your agent understands it, make sure the lender has talked to them, and make sure the lender is willing to talk to the listing agent. Because I'd hate to see somebody who has the best loan package out there not get the property because somebody didn't understand what they were dealing with.
Yeah, we had a VA loan on a home that we were selling a little while ago, and there were no hiccups.
None. It was one of the cleanest deals we ever did,
and
other
one
than
of the fastest ones, I think.
So I personally love VA loans, and I think most agents who have been doing this for a while, they do love VA loans. They're probably
they're one of the better loans, but they can't be misunderstood.
Yeah. So I think that pretty much covers making your offer as strong as possible. If you have any questions, feel free to reach out. We will have our phone number listed below. Always happy to talk to you about real estate.
Bye, everybody.
Bye, everyone.